Good morning and welcome to each of you. I'm going to make you aware that council meetings are available live through Zoom, and recordings may be posted online on County of Huron's YouTube channel. You may be seen and or heard as part of these broadcasts, and your name, comments, and or presentation materials will become part of the public record. And with that, I would like to call this meeting to order and also like to welcome and introduce Dalton Hamilton. Dalton's attending virtually, and he is our citizen representative for our audit committee. So with that, I'd look for a motion to approve the agenda for our audit committee meeting. So that's past Warden Ginn and Councillor Dietrich. Those in favor, and that is carried. Is there any pecuniary interest to declare at this time? Seeing none, then we will go on to our audit findings report. And this is presented by Matthew.
Sorry, Mike's saying we're switching the order.
Okay. So we are going to go to our draft audited financial reports, and Michael Blumhagen is going to present this to us. So Michael, go ahead when you're ready.
Thank you, Warden, and I apologize. I did not look at the agenda prior to today. I always just present the statements first, and then we get into the audit findings. So and then a closed session with council. It's my pleasure. Once again, I think this is maybe year 12. I was trying to count back how many of these I've done now, and I think it's actually maybe the 12th statement that I've presented to council. So starting to get comfortable. Not quite there yet, but we're getting there. But it is my pleasure to present the 2024 draft audited statements to County Council and the Audit Committee. So these statements, they're draft, and once approved by yourself today, and once we get the final legal confirmations back from our lawyers, KPMG will issue the final statements. Just wanted to say it was a pleasure once again working with Matt, Donald, and their team. They're great to work with, and it's been a pleasure working with their team. And I think this is year 5 of the current engagement, so we'll actually be going out for RFP after these statements are approved, and that will be issued later through the summer. And really just wanted to take a moment to thank my Treasury team, the staff. They do work tirelessly behind the scenes just to manage this audit and to work with KPMG. It's a significant effort, and they do an amazing job working with KPMG. And it's seamless on my end, and there's a reason for that. I see the work and dedication and hard work that is put in by my team just to make this a success, and it is appreciated. So they make my job easy, and I couldn't do it without their hard work. So I just happen to get the pleasure of presenting these statements, but the hard work belongs to my team. So in terms of the actual statements, so I've got it on the screen here today, or before you today. So on page, I can't see the page numbers here, page 3 of the PDF. This is the beginning of the independent auditor's report, and this is really what we're looking for as a finance team. And it's kind of our scorecard for the year. And again, we do have an unqualified audit opinion where our financial statements are presented fairly in all material respects. So that's what we like to see. And if it wasn't, if this statement wasn't present, we'd have a different conversation today. So if we turn to page 6 of the PDF, it is our statement of financial position. This is the kind of formally known as the balance sheet. So this really is just our assets and liabilities and overall accumulated surplus. Now these statements, they include both the county, and they also include our proportional share of the health unit. So because the health unit is independent of ourselves, we have to show our share of the health unit, which is approximately 43% of their balance sheet. We have to reflect that in ours. So just of that cash balance, the 88 million that we do have there, part of that would be 43% of the health unit balance as well. So their numbers are mixed, intermingled within our numbers on these statements. But overall, we did have a good year. Happy with the year. We had an overall surplus for 24, which I'll get into in a little bit. But I'm just going to highlight a few of the numbers on the statements here. So we could see our total cash. We have 88.9 million in terms of total cash. 87 of that is county, but 1.8 million is the health unit. That is down from 23, down from about 96.7 million. And that's really just reflective of the reserve usage that we utilized this year for some of our big projects, Gibbon Street and the Public Works Wingham Yard. So as we continue to use reserves, we're going to actually see that cash number decrease over the next 5 to 10 years. And cash flow will be a little more problematic in the future, or will have to be managed more effectively in the future. If we get into our accounts receivable, this is monies that we've recognized as revenue, just owed to us. We just haven't received it yet. But a lot of the change here year over year is some of the childcare funding that was still owed to us for the CWalk program. So that's why we had a little bit of an increase year over year. And we recognize it as revenue in 24, and the funds will be received subsequent to that in 25. Under financial liabilities, 22.5 million would be accounts payable and accrued liabilities. So a lot of this is related to vacation accruals for staff, just our trade accounts payable, just invoices that were set up at year end, expensed in 24, but just not paid yet. It'd be the cutover of our payroll over year end and whatnot. The reason for the increase year over year, up about $2.5 million, is just an increase in our holdbacks. We did have a couple large construction projects that are ongoing. As we're paying those, we're holding back a portion of those contracts. So we've got about 1.7 million in terms of holdbacks that we have on our books, contributing to a lot of that increase. And also just an increase in the WSIB actuarial assessment. So that increased by 787,000, and that's buried within that number. So that's why you saw that large increase over 23. Small decrease in deferred revenue, but really these are funds that we have on our books, but just we're not entitled to actually recognizing the revenue yet. So large part of that balance would be our outstanding gas tax funding, which we have on hand. They've paid it to us. We just haven't actually incurred the expenses yet or tied it to a specific project. Same with OSIF. We do have some carry forward of OSIF in there as well. We see our actuarial assessments for the post-employment benefit obligation. That's about 4.4 million. 3.7 million of that is county, and the rest is health unit. And that's just an actuarial assessment. It's something that we actually don't pay that full balance, but it's an actuarial assessment that we have to make in accordance with our accounting rules, and that's reflected on our books as well. And I do account for that later in our surplus, making some of those non-cash adjustments when we come up with our unallocated surplus. Debenture payable. So we didn't incur any new debt last year, so we saw a decrease there down to 5.3 million. But at some point, we'll start to incur more debt as we move through our asset management financing. Asset retirement obligations, that was a new standard last year that we had to book a provision for. So these are just future provisions for asbestos remediation and some costs associated with fuel contamination with their fuel tanks. So again, it's a liability that we have on our books, but we're actually not physically paying that out today. That would be potentially incurred in the future as we remediate some of these buildings. Our tangible capital assets, about net book value increase there of 20 million. We had a significant amount of capital expenditures last year. above and beyond our amortization. So we're seeing an increase in our tangible capital assets, and this will continue to increase over the next 10 to 20 years as we're refreshing our end of life assets. So current capital will far exceed historical amortization. So this net book value will continue to increase. And overall, accumulated surplus increased from prior year, a little over $10 million. And within that accumulated surplus, that's really our tangible capital assets. That's our reserve figure, and that would be our unallocated balance. So within that accumulated surplus, 2.1 million is uncommitted, and that will be there'll be a report in day 2, which will recommend the allocation of that 2.1 million to a specific reserve. So overall surplus that we do have uncommitted is 2.1 million. Are there any questions on the balance sheet before we move into the statement or the income statement?
Not seeing any, Michael.
Okay. So again, this is our, so it's a statement of operations and accumulated surplus, formerly known as the income statement. Shows, again, this is consolidated. This includes our share of the health unit. So of that, you know, for example, the provincial funding, 43% of the health unit provincial funding would be reflected under our statements within that particular line. And again, this is just a very high level summary of our statements. We have about 4,000 accounts that we do have, GL accounts with dollars attached to those, and they are rolled up into this essentially one page. So we have a lot of GL details which actually roll up into this one page summary. But overall, we can see most of our revenue here at the county is driven by our taxes at 53.9 million, and also provincial funding, 62.9 million. And there's some miscellaneous income elsewhere. We have rents from our social housing. We have accommodation fees for our long-term care homes, planning fee revenue, our provincial offenses, fines, and some investment income. But overall, pretty much in line with budgets for the most part. The one number I did want to highlight, just loss on disposal of assets. So there's a figure there, $781,000. So that is attributed to 2 bridges that we downloaded in boundary bridges that were downloaded to our local partners. We had spent some money on those in a couple of years prior. We put some investment into those bridges, then turned around last year and downloaded those. So that's where you're seeing this write-off, because essentially those bridges, normally when you have your capital expenses, then you amortize that over time. You end up with a net book value of 0. But because we downloaded them shortly after doing the remediation, we ended up just having to expense the remaining net book value. So that's why we see that 781,000 there as a large loss. Technically not a loss per se, but that is tied in with those 2 assets that were downloaded. And just to actually see that in the audit finding report, we didn't identify those until late in the audit. When I was actually working through the asset management plan, I noticed their numbers changed. And then I realized that we missed that in our statements. So that was a late minute adjustment on our statements. And you'll see that reflected on the audit finding report. Overall expenditures, for the most part within budget, and overall just a modest surplus. And as I stated, even though it shows that 10.6 million as the annual surplus, that's strictly just operating. It doesn't account for funds raised for capital or any reserve transfers. So that 10.6 million that you see here on this statement as the surplus, annual surplus, that's money that we're also using to fund our our capital expenditures. So overall, net of all reserve transfers, capital expenditures, and operating, our unallocated surplus was 2.1 million. So moving along, there's a few things I'll just touch on. Next page here, this is just our change in net financial assets, and that decrease there from 49 down to 39. That's just our reserve usage for the most part. Our cash flow statement is the following page. So we can see here just it shows, you know, the reasons for the change in our cash. So we can see we went from 96 down to 88 million. And the biggest driver really of that was just the cash that we used to acquire our capital. So we had 34 million in capital expenditures. A lot of that was was funded from our reserves. So that's why we're seeing a decrease in our cash balances. A few notes. So the rest of the statements are some of the notes to the financial statements, and I'll just touch on a few of them. So if we look at page it's 16 of the PDF. So it's note number 2, just our cash and short-term investments. So we can see we've had an increase in cash and a decrease in our short-term investments. And really the reason for that is due to our interest rates. I've just we're currently getting better rates in our bank account than I am locking into GICs and whatnot. So I'm just taking advantage of our current bank account as opposed to locking into GICs. In the past, that was opposite, where I could get better rates in GICs. But right now, just based on the current uncertainties and whatnot, I am getting better rates in our savings account. That's why we see higher cash balance and a lower short-term investment. But as conditions change, that mix will change again in the future. A few other notes to touch on. So number 7, again, this was the deferred revenue. It's just a more detailed schedule for deferred revenue, just showing you categories of money that we have sitting on our books but not yet earned. So we can see gas tax. There's actually some old COVID funding here that we're just slowly using up, and provincial grants. So our OSIF is buried within this provincial grant figure as well. So on page 20, this is just a schedule, note 10. This is a schedule of our tangible capital asset acquisitions. So we can just see the categories of assets that we've added to over the year, and also where we had some disposals. And it shows just overall accumulated amortization. But here we can see 34 million in actual capital expenditures and amortization of 12. That's why we're seeing an increase in our net book value. And the last one I want to touch on is just our reserve schedule. And that is schedule 1, but it's on page 26 of the PDF. So this just shows our overall reserves. So overall, we have 61.8 million at the end of 24. So just some details on a few of them. Our general reserve for contingency, 10.8 million. 5.5 of the overall balance is our committed capital or committed carry forwards. So we have 4.7 million in terms of committed capital and 883,000 in committed operating. So these are our funds that we rolled into 25. So they're not really available for council's use, but they're sitting there in reserve to be used in 25. So one number here of interest as we move forward with discussions on our future ambulance base renewals. We have 2.5 million here in reserve for future base construction for EMS. So that will be utilized probably in the next 2 to 3 years. Our equipment replacement, 10.3 million. This is primarily our public works fleet. So most of that is just part of our self-funding capital. So not really that available for council's use, just for general purposes. It's there to fund our fleet. And one edit I'm going to have to actually make, and I just caught this last night, but this global information systems, that should be insurance. So that's a typo on my end. So we have an insurance reserve of 1 million. Facilities capital, that's going to be utilized, that 1.2 million. We're going to be fully utilizing that this year for Gibbons Street. So that won't be available moving forward. Transportation, this is our public works. So this is 18.5 million. So this will be used in the future to support our roads and bridges. $500,000 for waste management, 2.9 million for homes for the aged. And this will be pretty much fully utilized in the next 2 years with respect to the generators and some of the major HVAC work that we have to do. Social housing, 5.1 million, but again, that's going to be fully depleted this year to fund Gibbons. And ECDEV, there's 1.4 million there. Part of that's sustainable Huron, 75,000, but there is some funds there for economic development. We have a small amount for forestry, and still some funds for water source, which we're utilizing 100,000 per year till we draw that down to more reasonable level. So those are some of the details on the reserves, 61.8 million. But at the end of 25, I'm forecasting 43, of which that would be 32 of that would be uncommitted. So our reserves are healthy, but they're also being well used. So. And I'm going to leave it at that for now, unless there's some questions. I will pass it. If there's no questions, then we'll pass it over to the auditors for the audit finding.
Nice try, Mike, but you're not getting away that easy. Councillor Klopp, you have a question.
The waste management, 500,000.
Yeah.
We've been talking about that. That goes way back to when we thought we were going to be in the business at the county, and then we slowly change. Is this the same one? Okay.
Yes, that's correct.
So there is 500,000 still left in that reserve, and what are we doing with it right now?
Through yourself, Warden, currently nothing. It's there for future potential if we have to do future planning, strategic planning for waste management, but it's just there as a contingency at the moment. Other than that, I don't know. Maybe CAO Wark might have some additional information on that.
Through you, Mr. Warden. Yeah, we don't have it earmarked for anything in particular. It's there should council indicate that they want to do some long-term planning in relation to this particular issue.
Yeah, okay, because that's probably what we decided the last time we whittled it down to 500,000. I just looked to the council and it goes back to about the 1990s. It was a lot more money. We finally whittled it down to this. I would humbly suggest that maybe we can just assume we're not going to do that anymore, but don't waste the money. I'm not saying spend it all in blue water, but you can if you want. Yeah, I think we should take a look at that, earmark that when we're doing our budget deliberation. Could you put that up there? Because I think if I remember right, okay, we'll leave it at 5. We may need it. As I say, this has been going back since the government downloaded it. We're all having our own. It's not a county thing. 500,000 is a lot of money sitting there. Just leave it at that for discussion. I hope we talk about it again.
Okay, that'll come up at budget time then. Councillor Harding.
I'm not sure whether this is the right time to bring this up, but when we're in the reserves talking here, we have 2 big projects underway, Gibbons Street and the yard at Wingham. And they appear in the page that I found it on, that those projects aren't done, but I find that we've spent 13 million or close to it, and 6 million on the 2 projects, 13 for Gibbons. And like, how much more money are those 2 projects going to take to finish?
Michael, please.
Through yourself, Warden. I don't have the specific numbers, but they're within budget. So whatever has been identified through the contracts, we're within budget for all those projects. I just don't have the specific numbers. They're going to be wrapped. The public Wingham Yard is going to be wrapped up. It's within the contract amount. And it's just they cut over year end, so they're still outstanding this year. But the amount that we had in the budget would be reflective of the remaining cost for those. And I can we can do an update at a later date on those, but they are within budget. And we're expecting Gibbons to be completed through to the end of the fall. But again, looking at the contract, every time our payments are going out, we're well within budget on that project as well. So I just don't have specific numbers in terms of what's outstanding, but we can have that at a later date.
Thank you for that response.
Okay, I see Dalton has a question, so Dalton, go ahead.
Thank you. Just on the statement of operations, Mike, you have rent revenue budgeted at 4.7 million and the actual is only 2.7 million, which is kind of comparable to 2023. I was just wondering what caused that.
Go ahead, Michael.
Yep, through yourself. Yeah, so that is the intercounty rent eliminations. We missed including that in the rent in the budget line. So when we actually do our the actuals, so we're charging out all the rents to treasury, planning, like all our internal rent through facilities. When we do our actual consolidations, we're eliminating those. So we do the intercounty eliminations. So we actually would reduce the rent revenue. It's about $1.5 million internal rents that we charge out, and then we reduce the expense. Just missed doing that on the budget side. So we've got that intercounty elim where we're grossed up the revenue, but then we have the gross up of the expenses on the revenue or on the expense side as well. So that's the disconnect there. And I remember doing the exact same thing last year. I missed making that adjustment as well. But that's just our intercounty rent line. It's just internal rents, about $1.5 million. So.
Okay, thank you.
Anything else for Michael? Seeing none, thank you, Michael. So now we are going to move on with our audit findings reports. And Matthew Beddick and Donald Harrison are both joining us virtually from KPMG. And I'll turn it over to you guys when you're ready. Welcome.
Good morning. Thank you. Thank you so much for allowing us to be here. I don't know if I'm sharing my screen or somebody is sharing the screen for me.
The magic of computers. I'm assuming, Donald, are you share screening right now?
No, I'm not.
Matthew is share screening. Matthew, you've got it.
Yeah, okay. But
Good to
what
go
I'm
if
seeing
you're
on,
okay with that.
yeah, that's okay. So are you seeing the cover page for our report right now on the screen? Okay.
Yes, we are.
Okay, perfect. Thank you so much. So we'll take a few minutes to walk through our report. Thanks to Mike for his comments. He actually addressed a number of the comments that we're going to make herein. So sort of sped up our process. In terms of the status of where we're at, as Mike said, the financial statements are still in draft. They do require approval by this committee and a few other rather perfunctory steps to get us across the finish line. But for all intents and purposes, we are done. Mike presented the draft audit opinion, which is included with the financial statements. As he quite rightly noted, it is a clean audit opinion. There's no qualifications or modifications, which is what you should expect. And as we go through this presentation, I'm going to highlight a couple other things that I just hope Council takes away from our presentation as they sort of evaluate the financial statements and the performance of management in the preparation of those statements. At our planning meeting back in February, we did talk about how every single audit has a requirement for the auditor to consider the risk of override of internal controls in the preparation of the financial statements. We also refer to this as a mandatory fraud risk. So it's not unique to the county, but it's something we have to do for each and every audit. There is a variety of responses that we have to that, including various tests, examination of what we refer to as high risk entries in the ledger, and looking for other indicators. I'm happy to report we have no findings whatsoever on this topic, so we are all good. Donald?
Yeah, thanks, Matt. On the revenue side, we are focused on 3 types of revenue. We confirm the tax revenue directly with the lower tier municipalities, For the grant revenue, we agreed the significant grant revenue with the grant agreements, grant letters, and the cash received, this is including government transfers. And we also ensure the grants are recorded properly to ensure the deferred revenue is correct. And also we audited user charges revenue using the substantive and analytical procedures, and there's no issues noted in these procedures. One of the largest expenses of the county's payroll and the operating expenditures. For the payroll expenditures, we used a substantive and analytical procedure based on the headcounts in the prior year and the pay increase. And also we tested the reasonability of the accruals for the period ended and ensured that the accruals for the payrolls are properly accounted at the year end. And we also obtained the confirmation from the actual for the employee benefit obligation that's disclosed in the financial statement, the balance sheet. And we also performed analytical procedures over the operating expenditures. And also we did subsequent payment testing to ensure that their unrecorded liabilities are not presented. And also we did not note any issues in these procedures. And for tangible assets, we discussed the capitalization policy with the management. We performed statistical sampling to test the sample of additions, and we reviewed the expense account to ensure the items capitalized were not improperly expensed. And we also tested reasonableness of amortization expenses. And we identify one misstatement, as Mike noted, related to the bridge disposals, and that was corrected by the management and included in our slides as a corrected misstatement.
So thanks, Donald.
Yeah.
As quite rightly mentioned, we are required to disclose the correction that was made. As Mike quite rightly pointed out, while it does show up as a loss on the financial statements, it might not be considered a true loss, from the perspective of how and why the asset was disposed of. But I guess that's a bit of a limitation of how things are recorded within the financial statements. The other item that I wanted to make sure people understood is, in our work, we do look at a variety of controls that the county has in place to manage its financial accounts. And we are required to identify and communicate any significant control deficiencies. And I'm happy to report that we had none. And so if I go back one slide and, we talk about the one correction that was made, that was all good. Happy to see that. No uncorrected amounts exist, right? So we didn't find anything else that required correction in the financial statements that hasn't been made. And so when I look at this comment, I look at the lack of significant control deficiencies, and I look at the clean audit opinion. And I would say those, three things together are, perhaps the one takeaway that council should take from our presentation. These are good things. So this is a combination of good things. And it also lends credibility, obviously towards the financial statements that are being prepared, but it also lends overall credibility to the quality of the accounting information coming out of the system, throughout the year. It's not, I'm not saying it's perfect, and we're not saying we're auditing every single report that comes from staff throughout the year, but the fact that there wasn't a lot of adjustment required to get to here should give council some comfort over that, and we do appreciate that. The next few slides are really just a fairly high level just disclosure, including new accounting policies this year that didn't have a significant impact, and no other significant items to report there. In terms of the financial statements, form, content, presentation, all well within the standards, all consistent with the size and scope of the entity. This slide here, you might say this is a bit of a laundry list of things, but these are required disclosures from the auditors to council. No disagreements with management. That's a good thing that you'd want to know. No illegal acts, non-compliance, fraud that we've identified. Again, all good things that you should be aware of. In terms of independence, as our role of auditors, we need to make sure we are independent of the county, and we've maintained that independence, and we are confirming that through this slide. And then the rest of our report are some appendices, including a copy of the rep letter that management will sign back to us. I won't go through those in detail, but just in closing, I do want to thank Mike and the rest of his team. Once again, they made the audit go smooth, excellent to work with, excellent cooperation. And we're happy to say, we're good being here at this time, which means, things went in accordance with budget and as our expectation. So with that, I will turn the meeting back over to the chair.
Thank you, Matthew and Donald, and it's good to know that we have a clean audit. Any questions from council to our auditors? Seeing none, then if that's the case, we do have a motion to go into closed session. That motion is to go into closed session to discuss an item that relates to personal matters about an identifiable individual, including municipal or local board employees. And also, this motion would delegate the clerk's authority to Nick Van Allen. He's an associate lawyer with Donnelly Murphy Lawyers, who will be remaining in attendance. So that would be all the members of the audit committee and our auditors and Nick Van Allen. So is there someone willing to put that motion forward? Pastor Ward McNeil and Councillor McClellan would second that. Those in favor? That is carried. So we will take a few minutes now to get set up and ready for our closed session. Okay, so we'd be looking for motion to come out of closed session and back into our open session of council. So Councillor Becker and Councillor Vanstone seconds that. Those in favor? And that is carried. So reporting out of closed session, the purpose of the close to the public session was to receive information from the auditors, KPMG LLP Chartered Accountants, on the audited financial statements. So I've got two motions that we need to do to wrap this section of the meeting up. And that the first would be approving the draft consolidated financial statements presented by our treasurer, Michael Blumhagen. So Councillor Harding would move that. Seconded by Councillor Noel. Those in favor? That is carried. And our second motion would be to approve the Corporation of the County of Huron audit findings report from KPMG. And that would be Councillor Finch and Councillor Dietrich seconding that. Those in favor? That is carried. So now I'd be looking for a motion to adjourn our audit committee meeting. So Councillor Dietrich, Councillor Heffer seconding that. Those in favor? That is carried.